AMC had a wild week, so it gets its own video again. Let's get started. I currently have a daily chart pulled up, and you're going to see right off the bat there's this big red dashed line. And this is a downtrend from the all-time high. And what we saw last week was a massive push up and then a rejection at that downtrend. Let me see if I can get this looking presentable. There we go. So there is a double bottom in here, and I show this in yellow. Okay, you can see this. And the price target for this double bottom was something like $32, and the price reached a high of $34.33. So the price target here was already met. But I gotta tell you, this double bottom reminds me of some of the other big double bottoms that preceded the biggest runs we've seen in this stock. In my last video, around 6 minutes, I say, hey, we're either going to see this thing break down or we're going to see another one of these W's shape up. And I acknowledge that, hey, the price moving to the 30s if we were to see this happen. And that is what happened. It did catch me a little by surprise, I'm not going to lie. I was expecting it to go down. But even this still does not break the measured move down fractal theory that I've been focusing on for about 6 months now. This still does not disprove that. And that might surprise you, but until AMC gets above this downtrend, this is the last downtrend. Until it can break above this line, I'm not going to say we're going to all-time highs. I'm just not. I'm going to get this bullish thesis out of the way up front and first, because I know my naysayers probably only watch the first few minutes. And shout out to the naysayers. Thank you for your views and comments. Very much appreciated. So I'm just going to cover really quickly what happened a few years ago, or over a year ago. In fact, I'm going to pull up one of my biggest charts. Yeah, I do it on the weekly time frame. This is a huge chart, guys. This is massive. So you're going to see in purple back here that there's a double bottom, right? With a low of 191. And then the price ran up and formed a massive triangle, a big handle. And that handle was what defined the price action after that 2021 January run, okay? And it lasted about 6 months. And then we had this big explosive move up to $72. All right, so let's talk about this 6 months here, right? And then this double bottom. It looks like, I mean, if this is a double bottom handle fractal, that's gonna be kind of cool. But let me talk about what happened in late 2020 and early 2021. Then we'll talk about what's going on at present. So this was a huge bottom. And you know, when the price goes from 191 to like $20, that's insane. It's insane price action. And what I ended up doing is taking this second leg of the double bottom and measuring its height to the lowest low, and then using Bulkowski's percentage mean price target statistic to calculate a theoretical price target for that double bottom and handle, and I came up with 23.45, and you can see that as the purple line right here. And it was at about that point where the big explosion in May took off, bounced, and then when it closed above it, that confirmed that the price was just going to climb up the options chain, and that's exactly what the price did until $72. And then we saw this beautiful Elliott wave pattern appear that formed this ascending triangle, and the price broke down out of it into a measured move down. Okay, and there have been a series of measured moves down since the breakout of that triangle. And if you watch my last video, I go into that. And there's actually another measured move down that occurs on the weekly time frame. And this run up to $34 falls in line with that. And I'll talk about that too. But right now, focusing on the bullish thesis. So this is what I did. Is I took the height of the second leg, the last leg of the double bottom, to calculate the price target. Now, an Adam and Eve double bottom has a percentage being price target of 69%. So we're going to take 69% of the height of that run and apply it to the intermediate high between the bottoms to calculate the price target. So I can go back into my daily time frame now, I believe. And we're gonna go auto zoom here and enhance, and drag this down. So let's just go ahead and do that really quickly. I'm gonna pull up a calculator so you might see my mouse doing weird stuff. I'm gonna use the last high, right? We're gonna say 32.23. And you can kind of see in my screen that the rectangle is up there, or that descending triangle is up there. When the price turned down at that level, that's when I knew we were still gonna head lower. And there was a lot of bullish action here and a lot of bullish sentiment, and I was bearish. And it's like, the sentiment is just nuts in this community that's trading AMC. It's nuts. So a high of 32.23, and that's actually why I started using technical analysis, because the constant murmur of Moaz hype was just exhausting. And I'm gonna subtract the low 1290 from that, and this gives me the height of that move, right? Oh, except I'm not gonna use that because that was the first leg. I wanna use the second leg. Okay, so 34.33. And then we're gonna subtract 1290. Right, that was the low. And that gives me 21.43, and that's the height of this run here. When I multiply the percentage being price target, which is a statistic that Bulkowski has identified, we have $14.78. Now this is a number I'm going to add to the intermediate high between the two lows to find the price target. And I think that highest high is right here on the 10th of February, and the high was 2096. So I'm going to add this to 2096. Okay, 35.74. That's that's really interesting because the price is already reached 34. So did I do something wrong is the question. Let's figure it out. 34.33 minus the lowest low of 1290, right? And then we're going to multiply that by 69%, and we're going to add that to the intermediate high at 2096. Wow. Okay, yeah, so I did that correctly. $35.74. If I take the price target and calculate it just like I did for the double bottom that occurred in late 2020 and early 2021, the price target's $35.74. Okay, and that's only $1 and change above the high we've already seen. So, is it going to be the same kind of run? I don't know, probably not. That's not to say though that we might not have another experience like we had in late May and late June, okay? Because there was a double bottom out there as well, and it outperformed, right? But that's because of what was going on in the options chain at that time, right? And here, there's a double bottom in here, which I have to kind of get $72 out of there to get the scale to work correctly. Oh my goodness. Auto zoom, and then don't show me anything past there. Okay, this double bottom. See this nice double bottom here. And of course, you couldn't calculate a price target based on this height that would equal 72, but you can see as I move the chart to the right what happened. It's just nuts. You can see how the price on the left gets smaller as the scale changes, because I chart in log scale. So yeah, I don't think that there's going to be a way to calculate like a $72 price target. Like, you're not going to get that. So if that happens again, whatever, that's great. But honestly, I mean, let's do a simple measured move up analysis. All right, so let's take a trend line, and let's just drop it from the lowest low there to the highest high, and we're going to say that this is a measured move up. Okay, that has found support at this prior double bottom target of 23.45, which makes a lot of sense. These are big levels. So if it's going to be a big move and we have an amplitude and run that equals that first run, we're going to come up to a high of 43.29. So if I zoom out, does 43.29 have any significance? $43? I think it might have it might be a good horizontal level of support and resistance right in the middle of this triangle. We definitely have something here at 41.29. That's where the run from June retraced to before bouncing, consolidating, and then, you know, bouncing around. So there's definitely going to be two levels here that are really important. The first is going to be that $33 range, which is going to be a tremendous amount of resistance. And then there's going to be this $41 range. And so I think the bulls are going to need to get through this past triangle before they can set new all-time highs, right? And this descending triangle has two price targets. One is down and one is up. Though the breakout was down, and that price target was $7. And people love to rag on me for that, but it's just the pattern and it's just the analysis, and that's just all there is to it. So I'm sorry if this doesn't stroke your bias to a place of happiness. But the triangle also does have an upward price target of $75. But this breakdown was bearish, right? And I did revise that $7 to $11.15, but that's okay. Nonetheless, so I think best case scenario, the bulls are looking for $43 based on the move we already had. It's not exactly Moaz, but it would make this incredible head and shoulder pattern. And I know a lot of people are following this, so I'm just going to go ahead and talk about it for a moment. I don't want that one. I actually don't think I have a blank chart right now because I've just been having way too much fun here. Oh yeah, the Fib fans have been lining up pretty cool as well. If you don't know what a Fibonacci fan is, I just took the high from 72 and I connected that high down to the low over here. And you can see the way that these Fibonacci fan levels seems to come into play. The price tends to move between, touch the resistances or close abouts there too, before reversing. Like, there's just a lot of them. It's just a popular way of using numerology to kind of map the price. And this big tail out here, right, nearing that level, close to here. I should have had these labeled on the right side, but I did not. Okay, anyway, so again, that next level is about $43 on the Fib fan too. So I really think if there is going to be another big run next week or in the next couple of weeks, that mid-40s range is kind of the next stop, next pit stop for the bulls, unless they can get that options chain squeezing and moving, and that would move the price to the top of the chain, which I think is somewhere in the 50s. But that's all bullish thesis stuff, right? If you look at the volume, the relative level of volume for these runs, like look from May to June, that's a lot of volume. And that was actually less volume than was seen in that 2021 run, right? You see more volume here. But I actually wouldn't be surprised if over the full course of this run, if this volume exceeds or equals this volume. Nonetheless, when we come over and we look at what we had last week, this is not nearly as much, right? Here, I'll drop a line on it right here. Like, this is about where our highest volume was. And if I turn on this left extension, you're going to see that it pales in comparison with the June and the 2020. You can see that yellow line. It's just not nearly as much volume. Volume's relative, but it's still pretty low, and the implied volatility is also not really all that impressive, hanging out. It reached almost 200%, all right, but in the June run we had an implied volatility of 380, and we had an implied volatility of like 600 in the June and January runs respectively. And that's really important, that implied volatility, because that affects those options contracts. So here we go. We see that the price ran from 1290 up into the 30s and rejected, and that happened to be on this downtrend. Let's see, I think I have it on this one from May to June. Okay, and what really caught my attention is that this analysis, this move from 72 to 12 and this bounce and rejection, this perfectly reflects the other measured moves down that I was charting last week, and I'll run through those really quickly now. So we have this downtrend, and the price finds a low, okay, at the end of phase one, and phase one describes just this push down. And so at that point I drop a Fibonacci measure down, and I used my Fibonacci's upside down, and that's totally fine. The Fibonacci's are not magical numbers. There is nothing special about them. If they have any importance, it's because enough people are trading on that basis. But it is just a method of measure, okay? So I do it upside down, and here we see that the price found a nice new little low here during the corrective phase, phase 2, and that's this green dashed line, and you'll see that this is an internal trend line because it actually cuts through the price here, and there's this V-type bottom in here. So we saw this move up, and that run reached just below that 61.8 retracement level from that initial move down. Okay, and then it rejected at that downtrend. You can see that. Boom, big rejection. And now we have a minor uptrend shown by this green dashed line here that is just about ready to be tested. The price has moved down for a couple of days now, and we did find a little support down here at this prior peak. But if the price can move past this green downtrend, I would fully anticipate that this pattern play out as it has the last 3 times and continue lower and lower until it finds a new major low. The price will find a new major low, and that would be consistent with a lot of stuff in my analysis too, right? I thought that by the end of this week we would have a really clear signal as to which way the price was going, but we don't. The RSI went deeply overbought and then exited the region and is now heading lower, and it doesn't appear to have any loss of momentum, of downward momentum. There was a slow decline after that initial hit, right, from that high, and now we just see a steady decline, and the volume is starting to come down. And you can see that. This is typically pretty bearish. The price tends to drop during that time. However, the one thing that I need to see to confirm that we're going to find a new major low is this IV to flip correlation. So currently you can see as the price is dropping that the implied volatility is dropping as well. This would suggest retracement or consolidation. When the implied volatility begins to move higher as the price moves down, that's when we know that the next major low is incoming. Watching this implied volatility relationship correlation flip from positive to negative with the price has been a really good indicator. So far, I haven't seen this. This will be the big confirming factor. When the IV moves up as the price moves down, bearish targets are coming in. We're looking for a new major low. Until then, though, the price could move higher. So, yeah, the RSI is currently sitting at 58. It's still in bullish territory, and it could very well turn around anytime between here and 55. And still be bullish. So we can still have one more red day and then a bounce, and that would be consistent with this trend line in here. So overall, AMC is just hanging out. It's just hanging out, and it had a massive run, but a massive rejection too. Like, let's talk about the weekly chart. Okay, look at this candle. This weekly candle has an enormous wick. This is an enormous wick, and it occurs on this major downtrend. That looks like bearish reversal up here and rejection, and this would be a shooting star, and I just really don't think it looks all that bullish. I mean, if there wasn't this big wick up here, that would be great. If you had this nice bullish reversal, this continuation, and then these bullish meeting lines between these 2 weekly candles and no wick, I'd be a lot more optimistic about that. But this looks like the price got ahead of itself and was rejected. Like, this looks like a bull trap to me. It really does. On the weekly time frame, you're going to see we actually did have some bullish divergence here. Now, the RSI didn't quite get to 30, but 31 is close enough. So we have a low of 31 here, and then a higher low towards 33. And then we know that the price set a lower low at the second dip there. So this would be bullish divergence in the RSI, which is something else I observed in the other measured moves down. Okay, but on the weekly time frame, the RSI isn't bullish yet. It's at 48. Okay, it's not above 50. So it could go either way still. This is insane. I've never seen something move so much and be so wish-washy. It's not like we got to close above this major downtrend. I mean, if the price closes above this major downtrend, look out. Okay, that is going to be an incredible surge. Like, this is the most bullish price target you can come up with right now in AMC, is to measure the height, the biggest height difference between a low and that trend line. And we have, I think it's here, this is a $32 spread between this low and the trend line. Okay, and let's just say that the price is going to break out over here. Okay, what do we got? $61. This is the most bullish price target you can have on AMC, I think right now is $61. This would still follow technical analysis, but it would take a tremendous surge in volume. Like back in January and June, these weeks had, you know, billions, 2.2 billion volume. That's big. If we have another week like that, yeah, you know, 62. But even 62 is an all-time high. It's not yet. I mean, you have to acknowledge AMC can make these moves because it always can. But this did not. This last week, the last 3 weeks, these incredible 3 weeks did not reverse the downtrend. That's crazy, but it's true. It didn't reverse the downtrend. In fact, this wick confirms that downtrend is still in play. Oh my god. So we'll see what happens next week, I guess. I actually didn't, I sat out this entire run. I sat out. I didn't trade calls this entire time. I did buy some puts and made money on those puts as the price dropped this last week. That's just because I'm bearish, you know, this is what I'm doing. It was a little harder to make that money on the puts because the implied volatility was dropping with the price, but that's okay. I still managed to pull it out of my ass somehow. You're going to see implied volatility is rising on the weekly chart still, and that's because it's still positively correlated with the price and the close was higher than last week. So yeah, big W, price target already met, rejection at the bearish trend line, and really a failure to close above a significant level, that $33 level. Yeah, it's not that the price is necessarily bullish, it's that the chart has been so bearish for so long that even a tremendous move like this doesn't make a dent in the downtrend. That's insane, right? That's how bearish it's been. And all through here, all the Moaz hype and all the this is the bottom, and slingshot. You want to see a slingshot? This is what a slingshot looks like, okay? This is what a slingshot looks like to the downside, to have this tremendous overextension of the price. And look at this high wave candle in there, right? Let's go ahead and turn on the 15-minute chart because we're gonna get a lot more definition. Yeah, this is, I mean, it's a beautiful run, right? You have this nice consolidation in here, right? That pennant, and it broke out to the upside, and it was almost a perfect half-staff move. Let's see here, that was run 1, right? Let's apply it to run 2 at the breakout, and it's like, yeah, that took us right up to that $31 level, and that's about where the peak was. After that, you know, euphoric surge higher. So the price made a beautiful technical move up, and that's cool. So the question is, what are we looking at now? Are we going to see a continued run, or is the run dead? It's starting to look like a V-type top to me. Okay, it's looking like a V-type top, and it's like, you're kidding. Come on, Cap. We're just talking about bullish stuff, and it's like, yeah, but if this chart were upside down, and this was a big low, and this was a supporting trend line, and you had these twin peaks or valleys in a double bottom on volume like this, right? Look at the volume here, this volume spike up here at this level. You would say that's a strong bottom and you'd be bullish. But here we see it inverted. We have a top here that has a V and M in it too, right? And this now would be the handle for that move, okay? So it looks like we had the price make this V-type top, and I'm just gonna draw it like this, okay? And then we have a handle shaping up, and that's what our handle looks like. Yep, so if this V-type top plays out successfully, the price will drop and break through that level. And it wouldn't surprise me to see something like this where the price is bouncing between these corrective phase trend lines, which is what they are. They are corrective phase trend lines because the prevailing trend is still down. The prevailing trend is still down. The price of AMC tripled and the price is still going down. Oh my god, that's crazy. That's absurd, right? Like, I can't even believe the things I'm saying, right? Like, I'm like, how? It's like the analysis. I'm just letting the analysis guide me, okay? Let's look at the divergence here in the RSI. I guess that's a lower peak right there after passing out of the overbought region a little bit. And this is a swing failure, by the way. That's a swing failure pattern right there. That W on the RSI. But so what we saw in the price though was a rise. Do you see that rise? From there to there, peaks going up on the price, peaks going down in the RSI, bearish divergence. And that is how I was able to identify the top. It was pretty clear. It's really clear on a 1 minute time frame. Let me clean this up a little bit and I'll take us out there and we'll have a look. I really want to dissect this and talk about it because yeah, it's very bullish and the continuation of this pattern could send the price to the 60s, but I really don't think that's going to happen. Look at these pipes through here. Like this morning when this opened and we saw this explosion of volume, right? 3 million, oh my god, there's so much volume in a minute. And then these pipes, look at that rejection, you know? Like what do you see here? I think we see a fractal, right? There's our V-type top, there's our handle, right? And the price moved down. And it recovered and moved down. So, if I've learned anything, it's that after these big moves, generally the price calms down and moves sideways for a really long time. It's so annoying. So I wouldn't be surprised to see the volume just get sucked out of the price and just fucking move sideways. It's stupid. But yeah, so big pipes there, obvious topping pattern, and we saw the price slowly start to fall and fall and fall and fall. Now I'm gonna turn on the 15-minute again. And I'm going to turn on the charting that I've been following for the last week. Okay, let's just... I don't think this doesn't make as much sense on the 15-minute. I'm going to have to do this on the 1 minute. So I hope I have all the price action. There it is. Yeah, so this is a different set of drawings on the 1 minute chart. You're going to notice that I have a downtrend here that pierces through those pipes. And the reason why I do that is because I tend to find that topping and bottoming patterns, they happen outside of or beyond levels of support or resistance, such as trend lines or price targets. And so I informed this trend line based on the peaks that follow, not necessarily the peak right here. And to see that the line intersected the midpoint of that first candle that formed the pipes, that tells me that this is probably good. So what do I see? What is all of this? Well, there's a couple of different downtrends here. And I think I need to go out to the daily for just a moment to get an idea of where they're all coming from. So, okay, here's the big primary downtrend, right? And then there's a smaller line in here, that's the retracement downtrend. So I'm gonna go ahead and zoom back in now that I have my lines all figured out. So primary downtrend, you can see it was very important. We had a lot of touch points there. There's a couple in here, right? 1, 2, 3. This was confirming that the price did go too high on that last run, and you know there was a couple of different tests, a lot of tests, and then what was this? 1, 2, 3, 4 attempts to break that line, and then the rejection and the move down, and then this corrective phase and then down. And what's this? This is a measured move down. The measured move down reappears with vengeance. Okay, and the price moves down, kind of comes back up, and then it moves back down again, and it's just like, okay, is that a measured move down too? There was some sort of like ascending, broadening wedge through here, which was interesting to see this play out so cleanly on the 1 minute. Start, 1, 2, 3, 4, 5, 6, V-type bottom, pull back, partial rise, bearish partial rise, consolidation, and breakdown. So to see this pattern play out like this on the 1 minute was incredible because it's a 1 minute chart. These patterns don't make a lot of sense at this level, but it did in this instance. Okay, and so then there was another downtrend, and boom, there, we found the support. We found the support from the initial uptrend. That big run up, there it is. And you see the price, as soon as it encounters that level, it starts to swing. This is called, I think, swinging? Is that what Bulkowski calls it? Or is it spinning? That's what he says. Bulkowski describes this price action as spinning, if you can imagine this. And you can see that the price just hugs it a lot. It tries to break out, and it can't. Hugs it, tries to break out, but it can't. And we end up with this horizontal level of resistance and this uptrend, right? And this kind of forms this pennant. And as the price breaks down, it continues to form smaller pennants. Like, look at the fractals, 1, 2, and 3. Boom, boom, boom. And what's important about this fractal occurring here, these are measured moves down, occurring at the uptrend from that push higher, okay? So we had the spinning and then this decisive dissection of that bullish momentum, and it just got wrecked until the very end of the day, where we had another corrective uptrend. And interestingly enough, the price appears to have closed above the corrective phase downtrend, or this retracement phase downtrend. So isn't that curious? It is possible that this downtrend from that high at 34.33 was broken, but we're gonna need to see the price come down and test the breakout level of $23 before we can really confirm that. It's too early to tell. Anything could happen. You know, AMC tends to get dragged down with the broader markets, and it is possible that we're going to see SPY stall and reverse from where it currently is. I think that could very well happen. There's a lot of latent effects, I think, or reality checks coming because of what's been going on abroad, and even in our own economy, as to say the U.S. That could lead to a downtrend in the marketplace. But yeah, so we had the measured move down resurge through here, and we have this cross. You see this cross? This was the push up. This is the retrace down, and I mean the price is a lot closer and under the green, or you know, closer to the red and under the green than closer to the green and over the red. So I would have to say I'm still biased bearish here. The cap, when are you going to be bullish? Well, I'm kind of bullish in phases, right? And as each of these downtrends is broken, like I'll say, hey, it could run this high, and look, it did, right? And I'm saying that again, if we can break this downtrend, this big one, yeah, like $60 is realistically on the table, but it's gonna have to happen first. Whether or not the price can maintain that level is a whole nother question too. I'm gonna say no, because this was a hard rejection. This was a hard rejection right here. Boom, and we didn't see something like this in the last two runs, and the volume's lower, and the IV is lower, and it just doesn't look like it's in the cards. We've had one big run, two big runs, three big runs, and proportionally, they get smaller, the volume's decreasing, and the IV is at a lower level. So if you're following a rule of three, you've had your three runs. Okay, so overall, am I bearish on AMC still? Yeah, I am. And there's some other cool charts too I want to look at. Let's just turn on the daily chart, and we'll zoom through some of these. This was an old chart of mine that I thought might be fun to bring back up. I did note there was a lot of major overhead resistance between 33.53 and 35.59, right? Bulkowski says that, and this is in regards to this red pattern you see here, he says that broadening descending wedges, he says downward breakouts favor a rising volume trend, and upward breakouts show better performance when volume trends downward throughout the pattern. And so here we had a rising volume in this broadening descending wedge, right? And he says that would indicate that downward breakout would be favorable, and that's true. That's what happened. So when I calculated this price target, I put two levels down: the bearish level, which was 1628, and the bullish level, which was 3494. And sure enough, the price did break down in a beautiful measured move down, and then spun on that target level, and it began to find a lot of support, and we had enough touch points to put in a descending triangle in here. So we have broadening descending wedge, we have measured move down, 1, 2, and 3, and then descending triangle. And the price broke out, pulled back, and then broke out and above, and it was at this descending triangle target level of 2095. That is where the price really lifted off from. Okay, and that kind of reminds me of the big run we had in June, where we had a target, and it was at that target the price ran. And then curiously enough, the price, when it did run, it reached the top of that broadening descending wedge price target at 34.94, just thereabouts, right at that level of resistance, and it rejected really hard. So now we're gonna find some more support. I think if the price were to come down, I would expect some support in here in the 20s, and then it might take us a while to get back down to 16. What I think is probably the most likely is that we're gonna have the price come down and waffle a bit. Okay, I think it's gonna waffle a bit, and I draw these weird lines because when AMC consolidates, it tends to just absolutely beat the living daylights out of day traders. So it makes these weird patterns. But yeah, so to see some sort of consolidation pattern here to kind of form a handle after that double bottom would make a lot of sense. And then we'll go from there and we'll see whether or not the price will reach up into the 60s. But it looks like this initial push is probably over, which is fine. But I'm not ready to be bullish yet. I'm not. I'm gonna go over really quickly these other measured moves down because I want to talk about them in context. So I have 1 hour chart, 180 days. I'm gonna pull up the first measured move down and zoom out. Okay, so this is our measured move down. I have the phases in different colors. Phase 1 is blue, phase 2 is gray, phase 3 is red, and you're gonna see there is a downtrend through here, right? And as the price moves down, finds support and bounces, that it rejects at that trend line before moving lower. Okay, I want you to remember that. I'm gonna pull up the second measured move down now, and I'm gonna change my time frame to 4 hours. All right, here we are. Phase 1 is blue, phase 2 is gray, phase 3 is red. All right, and what we have is a big move down, support, it finds it, and this phase 2 matches in every single one of these perfectly. And then a pull back, right? And then where does it reject? It rejects at this downtrend. Now I'm gonna go into the third measured move down, and phase 1's in blue, phase 2 is in gray, phase 3 is in red. And what do we have? A rejection at a downtrend. Isn't that interesting? And I used these 3 points back here for the first, second, and third measured move down downtrends, you know, and that's where we see the price rebound to and fall down. And now when I go out to the weekly time frame and I show you the biggest measured move down, we see the same thing. All right, now I don't have the phases labeled, but phase 1 would be from here to there. Okay, that'd be phase 1. And then phase 2, the corrective phase, would be from there to, well, we're still in phase 2, so we don't know where it ends yet. But we did see this big downtrend, and sure enough, a rejection. And that's why I'm saying that this recent run last week and its rejection downward actually confirms and plays into this measured move down theory. That big runs have historically followed these retracement moves from these patterns. And every time, the last 3 times, there has been significant MOAS hype and a lot of criticism of my analysis. And guess who's been right so far? This guy. And I'm following Bulkowski's analysis, and that's what's really important too. Is I'm not making this shit up. If my analysis makes any sense, it's because Bulkowski's analysis is just the best analysis in town. I don't know why anyone would try to do anything else. Like, follow a real expert's advice, not me, not YouTube. Read a book. Like, I got a stack of books here. Okay? Once you got like a stack of books going on in your desk, then maybe your analysis might start to make more sense, because I think that was a bull trap. I think there's a lot of people who got caught in that bull trap, and I know that there are a lot of people with positions like upwards of $50 who are still holding red, right? And they had to watch the price soar to 34 and drop back down to the 20s. This is not as bullish as it looks, and that's just where I'm going to stand, you know? Sure. My bias is bearish, so I'm still holding on to those $7, $5, and $11 price targets. Yeah, I am. I also acknowledge, though, that if the price does move higher, yeah, the analysis says it could do that too, and the upward levels would be not all-time highs. So I guess that's what I have in this incredibly lengthy video. It's gonna take me forever to edit, but maybe I'll just throw it into processing right away. So anyway, that's AMC.